Hey everyone, I just want to start this weekly news recap wrapping up what happened this week. After the US ban on Huawei, it has prevented a lot of American suppliers from doing business with Huawei. It has prevented companies such as Intel, Qualcomm, Broadcom, Xilinx from selling chips to Huawei, and Google to suspend some of its services to Huawei, such as the future Android updates and Google Apps and the Google Play Store. Huawei can still build their own custom version of Android using the Android open source, but they are not able to include any of Google's apps with it. All this trade tension that's been going on with the US and China has caused the market to sell off during the beginning of the week. It then recovers part of that as the US eased restrictions on Huawei by allowing US companies to continue to work with Huawei for an additional 90 days with certain limitations of course, but then the market falls back down on renewed trade tensions again as the US may consider cutting off American technologies to 5 more Chinese companies and not just Huawei alone. On Tuesday, Morgan Stanley cuts the bear case on Tesla to $10 a share, which I personally find is a little ridiculous, but either way, it does not bode well for the stock and Tesla sells off. Then on Wednesday, Citi comes up with their bear case on Tesla at $36 a share. Also on Wednesday, email was leaked from Elon Musk to the employees, claiming that they were averaging about 900 units per day, and if they can push it to 1,000 units per day, they will be able to beat their all-time delivery records in Q4 of last year. Of course, the company has not confirmed if the email was actually sent or if the numbers are correct or not. On Wednesday, we see a big drop in crude oil as US crude inventories surged to the highest level since July of 2017, and the sell-off in crude oil does not help the market as they usually move together. And on Thursday, it falls even further as the trade war tension dampens the global demand outlook. Within these 2 days, crude oil has dropped around $5 a barrel and close to about 10% within this week. The drop in crude oil has hit the energy sector pretty hard this week. On Thursday, UBS also cut their price target on Apple because of the slowing iPhone demand, and with the trade war going on, it may affect Apple in the future as most of the supply chain are located in China, which has caused the price to drop below 180 again. Facebook announced on Friday that they have removed around 3.4 billion fake accounts from October to March, which is double the number of fake accounts deleted from the previous 6-month period. Overall, the stock price doesn't seem to be affected by this news article. Also on Friday, the market opened higher but closed flat to ever slightly higher as Trump signals that a trade deal could lift the tough restrictions on Huawei. When it comes to earnings, some big movers this week would include both department stores, Kohl's and Nordstrom, as they both posted disappointing earnings and both ended the week well over 10% lower. Lowe's also missed their earnings per share, but they beat on revenue, but they also reported a decline in gross margins and they also closed well over 10% lower. Target also had earnings this week and they beat their earning estimates and they closed well over 10% higher. All brands also had a big beat on their earnings and the stock soared and closed well over 15% higher. But Foot Locker on the other hand missed and they closed well over 15% lower on the week. If you like this series, please like and subscribe and thank you for watching. I'll see you guys in the next video.